What's going on, Chris here? Started the video from the beginning, but this is my trade management on Friday. Friday was definitely a difficult time for a lot of people who didn't get in exactly when I did. I basically, as you could see, like I got in at a really convenient, privileged, some might say. Just I was on time for this entry, and I started it back here, and then as it added, it brought the average down, and then I moved all the stops to break even. So at this point, I had no risk on the table. Everything was break even, and my goal was to make sure my position didn't scale in too quick to where it could get hit. And the way I measured that was definitely these 5 minute fair value gaps. How to define a fair value gap is there's an engulfing, and then there's the wick low of the candle before it, and then the candle after it, the wick high, and there's a space that it creates, and it's usually used as like a strong support and resistance. It's like an imbalance, and usually these imbalances are defended because there's someone in the imbalance to where it's in their interest to make sure that succeeds or it doesn't come back to that area. So that's the theory. So I make sure my stop loss is above those areas. So then I'm trading with those who put in a lot of money. Some might call that smart money. Smart money is relative. It could be the Fed, it could be institutions. This is on like a chart level basis. In smart money could be stacked imbalances on the volume footprint. This one was just the 5 minute fair value gap, and it's a theory. But so I'm using the 5 minute fair value gap, and I'm using a trail on using it's like basically a 21 EMA. But specifically on TradingView, there's an indicator that I paid money for. It's called Oasis Trading Suite, and the Trading Suite has a trail that's like an EMA, and it's kind of like it's a line that follows, and it tells me when to sell the rally and buy the dip. And whenever I get that signal, then I start getting interested in finding a position from the trampoline off of the trail. So here, I already told you that I started a position way early. I think it was at 6 a.m., 6 or 7 a.m. And then I started scaling in after the news of 10 a.m. And as we could see, it's 10:44. And once we had the news, it's probably around 10:30. As we could see here, it's like in the middle of 10. I started scaling in, and I think one micro. These are micros, and they move $1.25 per tick. I think it's $50 per point. So these are in points here. And if you took, I guess, the average position, 3982.5 minus where it's at, or you could get the number of points, and you multiply that by 50, and then you should get that number. But by tick, it's a totally different. This is just the dollar amount, I think, per tick. So the entry, so first entry was due to my volume auto footprint trader because it was news, and I will go over my trade plan and strategy going into the Fed rate hike. But the first position was due to the auto footprint trader. I restarted it, and then because it can only do one at a time, and then so I restarted it so it's fresh, and then it doesn't remember that it already did one. And then I have another one open for just if I wanted to, slam pedal to the metal, just it would add double. So this one only adds one. This one adds two micros. But I wanted to go low and slow, So I added one up here, and then I had this price action indicator. It helps me just kind of temper down my trigger happy spine cell finger. You need something to slow you down, and if it can take away the option for you, and it just reads price action, then it'll highlight what's available. So it's more of a means of a psychological way to slow me down. You need a way to like fast and slow. Yeah, it's just like the famous book by Daniel Kahneman, Thinking Fast and Slow. You need a fast and slow because you just don't know like what is the ideal speed. So if you have a fast and slow, on average, you'll come out decent. So the first position out of the three was by the Auto Footprint Trader. The second position was by the Auto Footprint once the news came through, and I saw it making its way to the lows. I turned it on again, and it gave me 2 micros in there. And then when it came even lower, past I think this low, specifically this low here on this candle, I had it do a micro entry, and it got me in, and it did really good as far as the average of putting of where the trade average is. So the one downside is if one of these gets hit, the overall average drops. I think the one that disappears is usually the one that's the highest entry, and that's bad because the highest entry is the most valuable. So it benefits me to just have all of the positions at break even. So that's kind of it's a double-edged sword because if you have all of them in one position, all the stops, instead of putting the stop at wherever you got in, for some reason it just penalizes you more for holding positions if you have the stops where you got in versus an average stop where all the positions, the average buy-in entry point, like they call it cost basis. So I decided, you know what, I'm gonna have it on break even, no risk on the table. If I were to have it where I got in, there would be risk on the table. So that's the difference. And it takes a lot more skill to do it this way, where there's an average position, and making sure it doesn't get hit, because stop hunts is real, and I mitigated that by using fair value gap theory and making sure that I was above the fair value gaps on the 5 minute as they got created. So I didn't mark the fair value gaps. There's more that got created here, but I'm also monitoring my trail at this point. So let's fast forward. So this is Friday, of course, and people were freaking out. So this is getting closer to the market open. Market opens usually pre-market 9:30, 10 is when market opens, and this was like terrible to trade. So I started to fill in the fair value gaps on the 5 minute, and I started to get an idea of just what was acceptable for an entry. So this was useful for context, so I don't get too trigger happy. So of course I'm looking at this bottom screen here, and then I'm also waiting for it to pull back. So I'm looking at this at what's possible where it could come back. So I saw that I had a naked 15-minute breaker. I also had a naked 30-minute breaker, and that's what made me jump into action of just turning on my TDU footprint auto trader based on volume. So this is the 30-minute. There's the naked breaker, but once that broke, I just turned on the footprint trader, and then that's what got me that first position. So, and I'm looking between the 2000 tick. So this indicator is mainly used on the 2000 tick, but the thing is, the 2000 tick is too fast. So I like to do it on the 15 minute to slow it down. And I've just tried my best to back test it. And that's like my ideal, it's still fast, but it's my ideal slow. And then the 2000 tick is uh, the fast. And I won't really do the 2000 tick unless I get like a so this is my trail. Unless I get to the sell the rally, we hit the trail up here, these red dots. Unless we hit that trail, I won't use the 2000 tick as an entry. Or we retest into that 15-minute breaker or 30-minute breaker. So this is me killing time because with idle hands you get bored. So and then there's all these measured move lines, and I'm just kind of looking to see where would potential risk be. Right now, there's a lot of risk here to go to sell because there's all this support. So that signal means there's like a trap. It's either on the 2000 tick or 15 minute. Like I don't, I just whenever that sounds, I just don't trade. That's kind of like how I interpret that sound and why I put that on. So. Um, as we go through, like I could see that the 15-minute bearish order block went down. So then now I have kind of like a general idea of just kind of where I'm looking at to go up to potentially. So the trail in that bearish order block is informing me kind of like the area of interest to do business, like or just area of interest to get an entry. So every hour I also do this forecast. So I'm able to do an intraday forecast with this Timing Solutions. It's almost like, like an AI, helping me out here. It's calculating all the math of like what's possible of, probable event based on probabilities. And I saw that we had more downside in the curve, and it also told me to prepare for a break in market structure at a certain time. So that's kind of I was made sure I was awake at that hour. And then here I'm looking at the trail, and I'm looking for it to come back and retest. I also was looking at the bill, some fundamental stuff. When the Treasury bill goes up, it's risk off. So here, I'm trying to assess like in real time, just like should I be going short or should I be going long? And if the Treasury bill is going up, of course it supports my idea to go short. It supports the probability and the forecast from Timing Solutions. So the more evidence that I can give on that side, the more it supports my basically my conviction that that's the way to go. And so I'm making sure like I'm in line with everything that I see in terms of evidence, and watching the market participants and if they're hedging or not. And that's what the Treasury bill represents. It represents hedging, and people that are active participants are scared, so it's a flight to safety. So I associate that flight to safety with de-risking and risk assets. So I'm continuing to watch and flip through. Just so the 2000 tick, we're getting closer to my trail, and I'm looking to see if it turns on, and if not, then I leave it alone. And so I'm getting all these automated volume things ready. I'm also, toggling this volume auto footprint trader to see if it sees anything. I'm just trying to be really cautious on this pump when it gets me in, because it could go all the way to my stop of all 3 micros, and I don't want to get in too early. I wanted to get in just right. So here we're hearing the tink. That's the trail. We're getting sell the rally signals. I'm also watching the 5-minute fair value gap and how close it's getting, because we don't want it to hit the stops. So that's why I was giving ample room. Make sure it stays above those blue boxes that it's formed. And the theory goes that there's somebody there that's going to has an interest in protecting that area, and we will agree with them in the direction we're going. We're like, yeah, protect that area. So here I'm looking at the institutions, what their bias is. I hit the money flow index, which happens over here. We can see that it looks like institutions are pretty much neutral, like as close to the middle we can get. It looks like that's what they're doing. It looks like they've offloaded some longs, and so that's good for us to go short, because if they're long, it makes it even more difficult. It almost makes no sense to go short when institutions are long, because it means that we wouldn't really get a big move. But there's a probability of big move with them going neutral, and that's what we're aiming for. We're aiming for something where we could get 500 plus per account, and we got a couple accounts going. So I'm looking at this orange box. I'm also looking at oil. So I'm seeing oil as a fundamental contributor to the market going down, and it's really low, and it's actually hit like 52-week low. So and I'm looking at the VIX, making sure the VIX is where it should be and it's not going down, breaking market structure. If I saw breaking market structure, I'd be like, yeah, this is a bad idea to short. It looks more like a better idea to long, or just stay out of the market entirely. The euro is a risk-on currency. I'm seeing the naked breaker that we have here, and I'm looking to see if it's rejecting off this last week low, or if it's going closer to this naked breaker, 4-hour breaker. If we get closer to that, that would be bullish and associated with more risk-on tendency behavior to come in the future. And if I saw it going close to that, I would be like, yeah, it's not a good time to short. But I could see that it's not necessarily succeeding in going to that naked breaker, and I could see some people wanting to push it and to that gap, to fill that gap. And I really don't like going towards the attitude of filling gaps. I think gaps are a great measurement for an entry to set your risk above that gap. But I don't like filling gaps, because the world doesn't revolve around ordered gap fills, and my brain wants the gap to fill, and that is already a bad start. It's a bad position, because then greed and calculation fill that gap. Basically, it has a desire to make that come true, and to believe idealistically that the world will orderly fill that gap at the time I want it. And that's not how it works. And there is a huge 50-50 that it won't fill. And it just makes more sense with the direction that it's going, to just go with that direction. So I started to observe that after market open, it's just a chop fest. Like, this is untradeable. If at any point you got in any of these areas, it just looks like it's undesirable. Just because it's moving in a very tight range. It's almost less than 50 points, and it's moving really slow. And you can see there's no fair value gaps being made. This is the 2000 tick, and it's not the 5-minute, but still, you want a breakout to the downside, or you want to break out to the upside, but neither is happening, so we have to wait. So at this point, I'm going to speed up the video and just kind of narrate. So I'm just continuing to observe. So the one thing to note on this is that we had a break down on this Fibonacci layout that it put. So the only real significance there is just how price behaves around this range. So the idea is that if we bounced here and broke out, closed the hour above, we got a retest resumption of a full breakout. So the fact that it didn't, and that it closed back below here, back below the 0.13, these red lines are supposed to be fake out zones. And when they don't behave as a fake out zone, then we have to believe that there is a failure to break out. And we now have to treat the zero line as resistance. So that's kind of how this works, and I was told by an indicator to anchor the Fibonacci lines, the range, the high and the low at these points. So I did, and now I'm using it in my knowledge of the behavior and how price moves in the range in this on these Fibonacci levels to my benefit as to the trade. The trade is to short. So my idea was at this level or this level, we would add a short. And the idea is we would go to the opposite side of the range. That's the target. To make equal lows or to break that low. And that's the goal. And now to continue. Now we're looking back at the 5-minute. We developed a 5-minute fair value gap, but it's live. So we can't touch it. We can't get in it until. So now we just close that 5-minute bar. So now we have to see it test and get rejected. And then once we see the test and rejection and we see it come back below, then we could probably turn on the volume auto footprint trader, look for an entry on the 15-minute. Like with this 2000 tick stuff, this 2000 tick stuff is dangerous. That's what I've learned. So I'm also looking at this 15-minute market structure break. Do we break it, or do we? Because if we broke it, I would get out of all my positions, or I would let it hit break even, where my stops are. And the fact that we haven't broken it, I'm looking for attempts above the high of that order block and failures where it sells off. It wicks below that. When I see a wick, then I get more confidence to short because it's basically a swing failure. The bulls failed to swing higher. So I'm using also oscillators and just trying to help me discern what's happening live. So what happens live is that you're like, oh man, I'm like right, and then I'm looking for evidence that would go against what I think. And these oscillators are just kind of like a wild card, and I use them more for context and disproving what I'm thinking. And this one's more of a momentum, so I'm also looking to confirm if momentum is coming, because that's what I'm relying on. I'm relying on trend and momentum. So I'm looking, okay, is momentum really coming, or am I just seeing things? So that's kind of what I was thinking, and I wanted it to verify. So these oscillators are more of a verification tool. So this, I'll pause here, on the 4-hour, this red and the red dot was confirming, okay, I need to be looking for entries to the downside, and it's confirming, yes, I'm in the right frame of mind. This 4-hour is also really fast. I don't trust the dots. I trust more of the band with the dot. And as you can see, the band with the dot has more success on just kind of the frame of mind than just the dot itself. And yeah, it just kind of, it's that fast and slow kind of aspect. So yeah, I'm also looking at the trail. We got some sell the rally signals. So I'm starting to get kind of comfortable with getting ready to go short. I'm moving slow enough to where I'm not getting chopped up here. And I'm looking for, on the price action, some sell down signals. And eventually we chop enough and we test so I'm looking for testing the highs. We're testing the lows. So one thing I'm looking for, if we test the lows, just to let it go. Like I'm thinking, okay, I'm sitting pretty. Price is not coming back up here as far as I know. So I got 4 now, and I'm above the 5-minute fair value gaps, and I'm like, if this one doesn't work out, this is my belt and suspenders. So if this is my belt, this is my suspenders, and I'm above it. So I'm thinking there's a lot of safety here, and I'm good, and just to hold. So I'm holding, and I'm thinking, okay, ideally, if I got sell down on this 15-minute, it means that I've waited long enough. And I'm waiting and waiting, and we get into like 11:48. So I'm thinking, okay, things are looking good. I'm being patient. This moving average channel here is coming down to protect my positions. So I want that to increase more to where I get more protection. So I'm looking to make sure I go slow. I'm also looking at this 15-minute breaker or bearish order block. It's still in the same spot, so I'm not 100% confident to short 100% yet. If we get a nice attempt at the highs, maybe I'll get a sell down signal. So that's kind of what I'm thinking. So I'm waiting and waiting. So as we forward, every hour I'm updating my forecast, and so this is kind of just the psychology I'm going through live. I'm doing a really good job of managing the trade, the moving average channel. I think that's what that is. Yeah, it's a moving average channel, and I don't know if we can see it here. It says it's a 30. So that's kind of just why I decided. It's a random, like I just did some back test. I'm like, okay, yeah, I want to go with a 30. Yeah, it wasn't necessarily a holy grail kind of number. I've noticed that with these moving average channels, I like 40, I like 10, and then if 40 doesn't work, I'll tweak it, and that's what I ultimately ended up with, which was 30. So I'm imagining like this is like legit, and this is more protection coming my way. It's more of a theory versus like an actual legit protection. You just don't know. But the theory of it and the experience of every success that comes after it is something that is ever improving. But right now, I'm seeing that as protection, and it's coming, and that's tempering my greed and how quick I want to scale in. So we're going forward in time, and we're waiting for this 15-minute sell down signal, and we're going and going, and I'm zooming in. I'm looking at this 5-minute fair value gap. This is where we want to see if it fills and totally absorbs it, or if it gets rejected. So I'm like getting nervous. I'm sweating big time. I'm like, oh my gosh, like I was up like $500, and now I'm like 175, 180 per account, and I'm just about to lose it all, and I just don't know. I'm like, okay, time to just let it go. Just head down, just like, oh gosh, like it's coming, it's coming. They're trying to break through. Enemy at the gates. And you could see how close it is on the 15-minute. I'm like, okay, like I did everything I could to be patient, and then lo and behold, here we go. It's dropping. It's being defended. It's working. Like what I'm doing is working. Oh my gosh, I can't believe it. And that's kind of just how it works when you're gambling. You're like, oh my gosh, it's working. So then now I'm like, okay, where's the sell down signal? So I'm waiting and waiting, and I'm seeing over here the measured move. We're getting some resistance. I'm like, good. And I just don't feel confident with hitting the 2,000 tick sell down. I'm like, I want to do this right. I want to go slow. So I'm waiting and waiting. We're seeing that it's working. So we're going to fast forward. Now I'm checking if we broke market structure on the 15-minute. The 15-minute is kind of my like, okay, time to sell 2/3 of the position. And 30-minute is like, okay, yeah, it's time to sell all the position. And we could see here we had an attempt at the highs, and it failed. That's what we want to see. It's a stop hunt. That's technically what we call a stop hunt. It tried on that 5-minute fair value gap, and that's kind of that stop hunt. But we saw that 5-minute fair value gap got defended. So now I'm feeling comfortable. I'm like, yeah, that's right. You fail. Now it's time to go down. So we got that 7 minutes. I'm like, okay, let's wait 7 minutes. Let's see what happens. And it's like 12:39, so it's not really an ideal time to add positions. So I'm like, yeah, that's right. It got defended there. And so I'm like, okay, what do I do next? And I'm like, okay, I mean, might as well wait. It could always come back. a second time and come back harder. So I'm like, okay, we only got 5 minutes till this 15-minute bar closes. So I'm like, okay, so let's wait 5 minutes. So that bar closes. I'm looking, trying to verify my confidence with the forecast, with the numbers that this MetaTrader 4 is giving me. I take the data, I export it, I import it into Timing Solutions. I have the Q Spectrum 2, which is an AI to decipher the movement in the breathing of the market, and this is what it's forecasting for the future. And I'm just taking it as gospel. I'm like, okay, it's in line with my market structure and the capitulation of those bulls. And as long as this is correct and in confluence with my market structure and what it's saying, the rejection of the price right there, I'm going to continue. So we could see it's a nice doji right there, on the 15 minute. So I'm like, yeah, it's looking good. I want to continue. So I'm waiting for this to come up and to temper just my itchy fingers. Really practicing patience here. Was definitely afraid of it disappearing, all that potential money being made, being gone. And then now we've closed another 15-minute bar. So I'm thinking, okay, well, I could just keep this 4 and just continue with what I have. I'm content with having 4. I mean, that was difficult enough. So I'm going. It's hitting like 1 p.m. I refresh the data, the forecast to see if anything's changed. And right now we're hit this peak. So this is kind of what I want to see. I want to see a pullback, and lo and behold, since the news is over, and it looks like we're getting close to the peak, I feel safe with hitting the sell down on this price action indicator to help temper just my trigger happy, entry, um, standard that I have in my mind. I just want to hit the sell and just imagine everything will happen ideally. So this takes the option off the table. Obviously the option's always here, but in terms of like permission, I like to just have something filtered. And so I hit it, and I'm also thinking, oh, you know what? I might also toggle my volume footprint too. I check my fundamentals, which is the risk on currency and the 2 safe haven currencies in the VIX, make sure they're confluent just with a downward move in risk on equities. And I'm waiting. I'm like, okay, it's only 40 minutes until the next hour until I can update the forecast. And I'm just waiting and waiting. And I'm like, okay, we broke the 15-minute market structure. Now it's either going to fail and we're going to be correct, or it's going to succeed. And if we get further evidence that it's succeeding, then I wouldn't have lost anything. I would hit break even. But if it succeeds, I will continue to hammer, because according to the forecast, it looks like we got more into, expectations. Expectations can be dangerous, but I trust this Q Spectrum 2 that it knows more about human behavior than I do. And with Friday being quad witching and negative news about the banks, and we're getting close to the Fed rate hike, just overall tons of bearish fundamental indicators, whether it's the 2-year or the inversion in the treasuries, or the bills being really high, or the euro-dollar futures being really inverted, or the dollar being at least holding, or reverse repo being really high. These are all fundamental, safe haven, flight to safety kind of fundamental indicators. Consumer spending is down. Jobs are slowly coming down. So I'm thinking, okay, if there was like a freak event, I'm ready. So just let it go. Let it hit the stop. If it hits, let it hit a new entry if it hits. So it's going, 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 and we're gonna fast forward, and I'm thinking, okay, this is the make or break it for this, and we get in. We got 5 micros. It's I'm checking the 5 minute fair value gap in the position and context. We're right above this 5 minute fair value gap that got defended. So I'm thinking, okay, I gotta pause. I can't add more because it puts me in danger of being exposed for a stop hunt. So I want to stay where it's been within the last 5 hours verified as being an area of defense. So I'm thinking, okay, I'm sitting good. Now I'm just adjusting the take profit. I'm like, okay, now time to think about when to take profit. When do I decide to exit? I'm thinking about the exit. So I'm looking at just signs for me to exit. I'm looking at signs of failure and support, and I'm trying to see what's coming first: the failure of support or the signs for an exit, which would be like a bounce on support. So I'm like, okay, so this daily level, so it broke market structure right here on this daily high close, and it was by this bar. The high close is up here, so because it broke resistance there, that should act as support. So I'm looking to see if we're having more momentum to the downside on the day. If we have more pressure, I guess, like more of momentum, the price coming down over time in a short amount of time, then I could be like, okay, yeah, it's like it's happening. The forecast is coming true. But I'm still skeptical. I'm like, maybe it'll just hold here. That's kind of what I'm thinking. I'm thinking maybe it'll just pick back up and just close right on it. And looking after the day closed, in hindsight, it ended up closing below that level, which is good for bears. But like, I didn't know at the time if it was gonna just start holding here, and I wanted to seriously consider with the 15-minute market structure break that it could just totally go sideways for a period of time. And I'm like, okay, so do I cut it or do I let it ride? And I'm thinking, okay, well, since we've gotten over this hump, let's take it hour by hour. And if this is true, then we should see more and more evidence that's coming true. I'm adjusting my expectations. Maybe this will be the low based upon the measured move using Fibonacci levels and indicator. So a measured move indicator by TDU. It's right here if you're interested in looking it up. So I'm like, okay, we're getting this is a Keltner channel. So Keltner channel decides things by volatility, and I also got RSI bands. It also measures the volatility. So I'm trying to figure out the floor. So I'm like, maybe this will have equal lows, and I think that's what ended up happening. Reflecting back, so I think we'll get close to seeing that in this video because I think I ended it early. So I just was checking the momentum. Is that momentum coming? Can I expect a big move? And I'm just really trying to taper my expectations, like just have a more realistic view of just what's possible, because like we're getting forecasts from the measured move, we're getting forecasts from the numbers on the AI, and everything is just a probability. There's no certainties. So we have to have like that fast and slow. So I like to split my position 2/3 and a more realistic expectation, and then a runner of just a Hail Mary kind of target. And I'm just looking at it close. I'm debating in my mind, what the heck is it going to do? So we're getting closer to an equal low here on the day. And we did break the 5-minute here. So once we broke back down from the 15-minute, I'm looking to see a 5-minute bearish order block. So I'm like, it's not coming. With the 15-minute came also the 5-minute. So like that's nothing new. The main thing was the 15-minute broke to the upside, but we're testing this low. So I'm like, are we going to get a 5-minute bearish order block here? And that's what I'm looking for. And I'm not seeing it. We just touched the bottom of the Kilter channel. So I'm like, oh, we're getting really close to equal lows here on the day. And I need to make a decision. Are we going here or is that it? And I'm seeing, okay, we got some nice profit, almost $1,000 per account. And so I'm like, okay, let's take it hour by hour. Let's refresh the forecast. So I just let it ride. We hit equal lows here, and that actually ends up being it. And this forecast couldn't really play out because we didn't have another day or London session to put in that low. So I'm looking at the possibility of maybe it touching the yearly open. So I pull up the price chart and I got the level and like maybe it could come here. And I'm just really debating: is it equal lows? Is it equal lows, or is it going to go to this yearly open? And we got a test of the lows, and I'm like, is it going to go lower? Let's wait. And lo and behold, equal lows. And I'm like coming more and more to the conclusion as time goes on that that's it. And we're getting close to 3 p.m. 3 p.m. is usually when I cut everything. So I just wanted to give it one more final chance with this trail. Does it reject here and drop, or does it just power through? And eventually I'm starting to sweat. And I'm like, yeah, it's looking like it could go 50-50 either way. And I'm watching the time, and I need to be wrapping things up because it's Friday, it's low volume, and it's not really a trend day, even though we got it. And I'm looking at the time, I'm like, the closer we get to the close, the less movement we're going to get. So if we're getting some sell the rally signals and we hit anywhere near the bottom of this range, which is right there, I need to make a decision. So I'm starting to just run out of patience, and I'm looking, I'm like, I don't know. And I make a decision to cut. And let's see, that is, I get a sell the rally signal. I'm like, okay, it's looking like it's going to possibly break this 15-minute. If we test the highs and we hold above it, or we just, stop out the highs here, I'm just feeling uncomfortable. So I'm getting ready to cut it, and I just make a decision to cut. And then, because I'm like, yeah, 500 is pretty nice. Like, if I can't get 700, like I'll take 500. It's like, I don't know, 200 out of the 700 lost. So it's a sizable amount. Like, I better cut it. So I'm like, okay, hit the 5-minute, sell the rally signal. Like, if we get a pullback, then that'll be great. If not, like it's making me feel uncomfortable. And then I get to the point where I cut it. Let's see, that will show. That's it. I cut it right there. So I think I check my. I don't check the P&L, but it was basically around 520 per account. And I just wanted to kind of hold that up in esteem. That was tough management. It was very slow rolling. There was a chop box that got put in at the New York Open, and like I hope to just replicate that. The key to success is just basically habits, something that's replicatable, and that's totally replicatable. I'm looking at things that help me protect and achieve each thing I set out to achieve, which is to protect the stop of the average position, to scale in at an appropriate time, so that there's multiple things that you have to achieve in a live setting, which is very difficult. And also managing your emotions during that whole time. And there's some traders that don't like to be mechanical. There's books out there for psychology, but I'm more of the mindset: the more you can automate, the more it helps with your psychology. and that comes with the automation. The automation should follow the trade plan, and the trade plan should follow the numbers of risk to reward and percent risk per trade and percent loss per day, and the numbers should work out to where it ends in profit by a large amount. So that was just all in balance. That was all being maintained with the automation and just what I was focusing on: the trail, the 5 minute fair value gap, and all that in live real time is very difficult. But because I did it once, I could do it again. And the goal is to keep on making these case studies that of just continued improvement, or things I would like to replicate, or just kind of the same frame of mind. And I would like to review these videos, and maybe this would be beneficial to other people. Next video I'll be going over is pretty much the strategy and trade management going into the high impact news cycle, and just how I'm going to enter. Obviously, I'm going to enter through a non-price action entry. It's going to have to be through the volume. The price action kind of entry window will be determined by my 30-minute market structure break, and just the trails for buy the dip, sell the rally. I'll be looking at the 1 hour, 5 minute, 3 minute, but once we start trending, I'll be looking at the 5 minute, 3 minute, using the bounce bands and that Oasis trading suite. So it's in those 5 minute fair value gaps in live real time, but it's a very delicate balance. It's very difficult. It's a way of seeing things, and how you see things helps you navigate context in trusting certain evidences, prioritizing certain evidence over other evidence, because there's going to be noise, there's going to be conflicting evidence, but the goal of managing risk is being able to prioritize the right things you see as what is real. And that's the main lesson. And people call that edge. But you could call it whatever you want. It's just how I understand it. But thanks for watching. Talk soon.